Oil has risen almost 3% in a jittery week. Welcome to Market Insight. I'm Elena Casas. After months of mostly shrugging off the conflict in the Middle East, oil markets turned volatile this week and are on track to gain about 3%, with some big swings along the way. Traders are waiting for Israel's much-anticipated retaliatory strike on Iran, which could target the country's oil installations, while the knife-edge US election is adding uncertainty. Joining me now to dig into all that is Viktor Katona, Head of Oil Analysis at Kpler. Victor, hi. Let's talk first about the US election then. Why is that making the oil markets nervous?
Well, I think partly the US election will be a decision point for regulatory policy, right? Because Trump represents this, drill baby drill kind of policy. Everything will be allowed. Taxation will be much laxer. Regulation will be, much more sparsely implemented. But in general, I think it's really the geopolitical side of the elections that makes the market jittery. So it's not really a policy question, but rather, if Trump comes into the office, then the Israel-Iran conflict takes on a completely different dimension than it had before. And it's really a bet on that, specifically who wins the elections and what kind of a geopolitical policy would then ensue from this that really scares the markets, because it could go either way. It could go status quo in the case of Harris. It could go really haywire in case of a Trump victory and a higher and a bigger Israel-Iran escalation.
If Israel does target Iran's oil infrastructure in this strike that we're waiting for, what impact would that have on the market?
Well, I think maybe it's a little bit of a secret guess, but I think that specifically around the days when the US presidential elections will be held, I think those are the days when we could expect a target, because the effective missile strikes, because it could go a little bit under the radar, even if it's impactful. And that's arguably what Israel would want. It wants to inflict damage, and at the same time, it wants it to be largely unnoticed by the market. If it does happen, then effectively it all depends on how Iran reacts. If it closes down the Strait of Hormuz, it's over for the oil markets. We might just as well pack our bags, because oil prices will be so much higher than they are right now that effectively triple digits would be the norm for many, many years to come. But if it's more of the tit-for-tat retaliation, this could go on for months and months. I think that's more likely, to be honest. I think the tit-for-tat, striking each other until we get bored, is the real way forward from this.
We are, as you mentioned there, in a generally oversupplied market. As long as Iran doesn't close the Straits of Hormuz, do you think that that's the factor that will win out in the end, that the market will be little influenced by this conflict between Israel and Iran?
It has to. At some point, it has to. Maybe it would be gradual, pretty much in the same fashion that, for instance, right now, people have forgotten how weak China still is and how weak generally physical sentiment has become. It could take months until the market realizes that in 2025, we're oversupplied. And only at some point, when it becomes too evident and the geopolitical stories dissipate at some point, and there's no new story to discuss, then the market will suddenly realize and look around, and where everyone is well supplied, there's no real source of new demand growth, and 70 could very well be within reach, or even lower, below 70. But again, that geopolitical narrative that is constantly spun around the day-to-day news that we receive, that needs to end. The market needs to have that clarity to realize how bleak of an outlook we actually have.
Donald Trump, of course, also wants to encourage more drilling in the US. He wants to present himself as the oil-friendly candidate. But does that mean, in case of his being elected, oil prices would go even lower if US supply starts to increase further?
I think in the long term, yes. So it would take a couple of years, because even say if a US driller would want to spud a well and bring in incremental production into the market, it would take 6-9 months to bring that into the market. And that's assuming that everything goes well, everything is extremely quick. But realistically, it would take 2, 3, or even 4 years to see any tangible impact, because what Trump would represent is more auctioning, a tremendous amount of federal land being provided for drilling. And it takes time to drill. People need to first assess the quality of that acreage, then they need to spot a couple of exploration wells, and only then can you realistically begin to produce. So I think the Trump effect would take years. It would not be immediate for sure.
Where does this geopolitical picture leave OPEC Plus? Are members going to work together to reduce the risk of oversupply, or might we see cracks in the alliance?
Well, I think OPEC Plus is acting in unison when it says that it's very worried about demand. Everyone is worried. Everyone is looking really just looking at the map of the universe and thinking, where could we supply more oil if we bring back our production? And that's the key question. They could bring back production into 2025. I mean, technically, that's still the official policy. But if you really think about where are these pockets of growth where they could actually supply this oil to, you end up with a tremendously low number of potential targets. And I think that's going to outweigh the policy. I think OPEC Plus will do nothing into 2025. They will just roll over their targets, their current targets, and then wait for better times to come. I mean, they will come at some point, most probably not in 2025.
Thanks so much, Viktor Katona of Kpler. And that's your market insight. Don't forget, you can watch more videos on Reuters.com.